All right, I have the recorder on. Mr. Java Man is asking for a link to the allocation discussion. Let me. It's like, we're having all kinds of problems here. Let me get that for you. Management, here it is. How's everybody doing? Java Man, here is a direct link to that. Okay, everybody, welcome, welcome, welcome. We are here. Obviously, where else are you going to be? We are going to be talking about the VIX and associated VIX products. There's some similarities between them. There's some differences, and there's some differences in the VIX products themselves that differentiate themselves from many of the options, if not most of the options that we trade. So as we get into this, and this is recorded, I would like to keep the questions germane to our discussion on VIX and the related products, and then afterwards I'll stay logged in here and answer any questions outside of that. But just for continuity and brevity's sake, let's keep the questions about VIX. And then, or you can always email me, or you can try and catch me in STO. My email is Shorr at Prosper Trading. Right there, .com. I do check my email throughout the evening. You can even catch me on the weekends. I won't promise that I'll get back to you, but you have a good chance of it. Let's put it that way. And I think anybody who sent me an email can probably attest to that. All right. Anything pressing before we get going here? I don't think there should be anything. Did I get your list of topics? When did you send them? Last night or today? Java Man's asking if I got his email. Does it come as Java Man? That could be the first thing, because I don't remember an email from Java Man. Then I didn't get it. Hang on a second here. Let me check my email. I don't see it. Let me make sure that I didn't accidentally throw it out. No, the last one I got from you was on September 11th. Yeah, please do that, because it didn't come here. And Java Man, I don't want to use your real name, but are you from the Chicago area? I don't think you are. Just yeah, no, I didn't get it. I got the one on the 11th. That's the only email I've gotten from you. Okay, because I know I grew up with somebody who was a year older than me. Probably still is a year older than me, to be honest. There is a way to move the chat. The question, Jerry, you're in the right place. You're going to find out. Hang on, let me go through these really quick. Is there a way to move the chat bar to the side in this room like it is in the other rooms? There is, but it has to be made by me for everyone. Now, over in STO, I have it over to the left-hand side underneath everybody's names. Some people get very, very particular about that. I would rather have the real estate showing more of the screen than seeing the chat. That's me. If we, And this isn't the room that I'm normally in. I want to make sure that I'm not messing anybody up. So like Patrick Hammond usually is manning the videos in here and the discussion sessions. I don't want to make that change without running it by him first, right? You know, just stepping on toes. But I can definitely make that. And I mean, the change is easy to do. We have to, I'd have to the room would have to be taken down and then brought back up for the changes to become. But I mean, we can do that anytime, and we can, by the end of the day, so it's there for tomorrow. But I'll ask Patrick if he has any, because I remember, I mean, this had to be a couple years ago that I just kind of did it without asking anybody in it was either in OV, I can't remember if we had started STO by that point, but some people just lost their you know what, and I was like, man, it's not that big of a deal, and I think it's better. But I agree, Dean. I would rather have it over on the left-hand side. Well, here, I can, for those that have shown up today, we can make a little poll. I'm just going to say, put it here, and then I'm going to say, I think I can put it on the right. I'm not going to make that a choice. So I'm going to run that. Then we'll know. And then I can ask Patrick. So you guys should see that that poll out there, and you can just vote. I'm not going to vote, and then it's just going to be a very straightforward. Whoever wins wins. Okay, I think we got those out of the way. Everybody feel free to, you can only vote once. This is not Democratic Chicago. Won't let you vote more than once, and I'm not going to vote because I don't really need to. Okay, so Jerry asks the very present question of what are VIX products. So now the VIX product, VIX, stands for Volatility Index. It is the level of fear. Some people call it a fear index. Certainly an uncertainty index. And the general trend is that when the VIX is higher, there is more volatility, which means more uncertainty. And when the VIX is lower, the opposite is true. It's calculated. If you guys want to see the algorithm, I think the SIBO has it out there. But it is some sort of average of out of the money puts, at the money options, out of the money call, implied volatilities for the S&P 500 components. To be honest, I don't know if it's weighted. And if it's weighted by volume or if it's weighted by price. I would think that it's weighted by volume. If they do weight it, it would be weighted by volume. I'd have to check. The actual big time internals on that, I'm not exactly sure of. The VIX tends to go up in value as equities go down in value. And the VIX tends to go down in value as the price of equities go up in value. Much the same way that the market moves, right? In a general bullish market, we see pretty controlled grinding type of moves. Now, of course, there's exceptions to that. You'll see gap moves to the upside and the downside in individual stocks. But as a general rule, the market goes up in a slow, predictable fashion and goes down much faster. Now, it might not go down as often as it goes up, but when it goes down faster. Okay? That's what the general thing of the overview of what VIX are. Now there are a bunch of different products that are derived from the VIX. And now remember, the VIX is an index, much the same way that the S&P 500 is an index. You can't trade the S&P 500, can you? You can't trade the index itself. You can trade vehicles that try to mimic it, such as like an SPY. That does. The SPX. That does. But not the actual index itself. So, yeah, I guess that's true, Jerry. And we really concentrate on really two, and when I'm doing VIX plays, I really concentrate on one. Now there are others, but because I am option centric, I tend to gravitate towards one or the other and not the actual underlying ETN or ETF or future. Okay, so and it's just a big math problem. That's why with all these different vehicles to trade, there's a lot of eggheads that have their black boxes pointed towards all of these trading vehicles and try and take advantage of very little aberrations in each. When we're making VIX trades, I'm not day trading the VIX. When the VIX gets extended either direction, that's when we will play it. Or if our portfolio is somewhere where we feel we need to hedge some of it off. So if we find ourselves overly long or overly short in the in our holdings, well, and that's usually going to be overly long, just because the market is going up, and so more and more of our signals are going to be to the upside, just because that's the general direction of things. But we may put in so if we're long and we see the VIX getting lower and lower and lower and lower, well, we might buy a hedge in the VIX just in case we get a sharp move to the downside, to let us have a little bit of play so we're not completely handcuffed if the bottom falls out. Okay, so it looks pretty convincing here about where we want the chat to be. It looks like people want it on the left. I agree with you. And I will, I'm going to take this down just so it's not in your way. We'll stop the poll, close it for everybody. And then I'll ask Patrick if he has any objections. And if he does, I'll ask him why. And then I'll do it anyhow. I'm just kidding. Okay, so let's just concentrate on the VIX and the VXX and what the differences are. Now, and then from there you can get into all your other ETFs and ETNs of leveraged up, leveraged down, medium term versus short term. There's all kinds of things out there. I wouldn't get too cute with it as a retail trader, to be quite frank. VIX and VXX are probably the only two that you want to use, and I personally gravitate towards VIX just because I think it's a cleaner play. That's me, though. Okay, so let's talk about the similarities between VXX and VIX. Okay, well, both of them, like I said, they're based on S&P 500 volatility futures. So remember, you can't trade the VIX itself, the index. You trade futures on it. So for example, you guys see here, I keep this up all the time. You're like, well, that's not the VIX, Mike. You're right. That's the October VIX future, which is trading 30.05. Well, let's look at what the VIX is doing. I don't need that backslash or that forward slash. Now we see that the VIX itself, the index, is trading 26.18. The thing is that the prices are not derived from the VIX, they're derived from the VIX future. And what this is saying is that over the course until now, until the VIX, the October VIX options go away, implied volatility is going to be higher than what it was. And I'm trying to remember, when is VIX, October VIX options are going off, whatever the Wednesday is. We'll get into that in a second too. October 14th. That's the closing day of the VIX. Okay. What we'll see here in the VIX and the VXX is that there is a strong reversion to the mean when the market is behaving itself. Essentially, when it's not very volatile, it'll revert to a mean. And they tend to do that quickly. You'll get spikes in the VIX. Very seldomly will you see the VIX just get absolutely cratered, like going from 25 to 20 in a day. But you can easily see it go from 25 to 30, 35, even 40 in a day. When the VIX, just like, when the market moves down, it moves down quickly and violently. The VIX is going to do the opposite of that. The VIX is going to react to that because implied volatilities are going to go up. The VIX index, the VIX futures are going to go up with that. Okay, so I really don't care where the VIX is. I care where the futures are. Why? Well, one, because the options that I'm going to be trading are based on that futures price. And just because we have a less than volatile day, it really hasn't changed. So, we see that the VIX itself, let's make this a little bit bigger and then get a little bit more data under our belt. This is a 3-minute chart, by the way. Okay, so we see that, today the VIX started out at 26.85. It rallied up to 27.43. And now it's just slowly come off all day to where we're at or near our lows. The low today was down near just above 26. It's trading 26.12 right now. Now we look at VIX Futures, VXV20. I need that slash in there, don't I? VXV20. V is the symbol for October in trading parlance. And we see today, now this is the 3-minute chart again, we see that the VIX itself, the VIX futures have been trading not down to 26, they've been trading in between, let's just say almost 31 down to 30, so in a point range. Not that much different, a little bit smaller of a range, but the VIX futures itself have been higher than the VIX. You guys aren't updating? Oh, good point. Thank you, Java Man. Let me show you both those curves again. Hang on, it's jumping up in a second. That's what it says. Come on, let's try it. See if we can get a connect. There we go. All right, so what you're seeing now is this is a VIX chart, and the darker black part is the day. The night is over here. But starting at 8 looks like 8:30 is your first print. So we traded down all the way down to 26.02, high of 27.43, and then we've come down throughout the day. And then but what we want to look at is the VXV, the future. The future has the same general shape to it, but in a bit of a tighter range and at a higher value. So you could say, wow, the VIX is down to 26. I want to buy it. Well, the VIX is down to 26, but the futures are not. You have to be thinking about the futures. Okay. Another interesting part. The VIX will not track neither of them, the Vix Futures nor the VXX, are going to track the peaks of the VIX index. You could argue that it's not going to track the troughs either, but we're more worried about the peaks. Because let me think of how I want to say that. Okay, there is an elasticity to the tails. Where you hear about fat tails a lot, there isn't a fat tail. There's actually a skinny tail. For one, the one big reason is the options. Now, does anybody not know what the difference between an American and European option expiration is? American versus European. Those are the two main types of options out there. Some people are ringing in here. No, not a day thing. That's true, Chris. American options eat freedom fries. American options are always carrying a loaded gun with them. Almost, Jerry. Almost time. There you go. Amir has it. European options can only be exercised at expiration. Whereas an American option, now this has nothing to do with wherever it's traded. You can have European options trade here, you can have American options trade over in Europe. It's just how they, probably when they first came out, they came out with a little bit separate rules. So for example, all the equity options that we trade in any of the underlying stocks and almost all of the ETFs, if I buy something on a given day, I can exercise it 5 seconds after I buy it. It won't go through till the next day, but I will, I can exercise whenever I feel like it up until expiration, which is essentially 4 o'clock Central Time. You have an hour or so after the close to get rid of those. European options can only be exercised at expiration. So the reason it doesn't track those tails is because it's banking on the fact that as long as there's enough time. Now, if you're dealing with a one-day option, well, then your future is going to track very closely to the VIX itself. But if you have even a few days, the math behind it is going to say there's time for this to revert back to the mean. Not that the VIX isn't going to go up, that VIX futures are not going to go up when the VIX does. It will, but it won't go up as fast and it won't go down as fast because it is mathematically planning for that reversion to happen at some point in there. So you don't get, you're like, well, the VIX is trading 80 and the futures are only trading 60. Well, that's because they're like, the panic is going to be short-lived in general. That's the nature of panic, right? It's fast. Nobody panics slowly. Exactly, Dean. There are very few European options. VIX is one of them. I was going to say, I would say 90, 95%, maybe even more of what we trade, ETFs and stocks, are going to be American style expiration. But VIX is one of those that's not. Okay, so does everybody understand that when I talk about that elasticity? The rubber band, when it starts to get stretched, needs more and more force to keep it going. right? When you start to pull on a rubber band, it's pretty easy. When it gets really, really elongated, you need more and more force to move the same amount of distance. Same concept with the VIX Futures. I believe so. I'd have to check. I know VIX are. VXX, I would imagine VXX are, because I'll tell you how the VXX is structured. I would imagine that those are as well. But like I said, I gravitate to VIX options. I don't trade VXX, and I'll show you why. Amira, like I said, we can go through, but I'm not exactly sure. I would concentrate on the VIX ones though. We will see. So now, when we look at the volatility structure, so a generic equity curve is going to have put implied out of the money put volatilities higher than at the money and or out of the money calls, right? We'll see a smile, they call it, that looks like, I don't have Sterling Vol Trader up here, but essentially what you'll see are, let me pull up I'm just going to bring up, I don't want to trade, I want a chart. I do want to trade. I'm just going to let's just look at Apple. Okay. If we look at the implied volatilities for each of these strikes, let's go out a couple weeks so we can look at this. I'm just going to go out to regular NOV. And we can see that the implied volatilities here, so implied volatility at the money is 48.36. And we can see that as the puts, everybody see where I am, make sure that you guys can see where I'm looking here. So I'm on the put side here. We can see that the implied volatilities are going up as the strikes go down. Conversely, on the call side, the out of the money call side, you will see the implied volatilities typically be flat to even going down, which is what you're seeing here. This column here, we see that the volatilities are actually going down a little bit. And then when we get to the very teeny stuff, we do see a little bit of a bump up, but not nearly as dramatically as we see it on the put side. Because why? Same thing that we've been talking about. The markets go down quickly and they tend to grind up. So the implied volatility associated with the strike that's out of the money to the put side is going to have an implied volatility that is higher. Okay, everybody understand that? Any questions on that before I go on to the next? And so you're going to see a VIX time structure opposite of that. You're going to see calls. So let's go here and let's get... oh, that's the D's. Oh, they're not going to list these on this platform because... So here, they're just regular VIX options. That's going to be based on that Wednesday. So let's look at like, I don't know, let's look at just November. You'll see here the implied volatilities for the calls are going to go higher as you go up in strikes, and for the puts, they're going to go lower as you go down in strikes. That's what you would think in inverse to how the equities are going to move. All right. Okay, those are the similarities between the VIX and the VXX. Any questions before we go on to the differences? Malika Juna. We're gonna have to wait until after the we're gonna have to wait until the end of this discussion before we start getting into all of our stuff. Is germane. We will keep it in Thinkorswim terms. Not that you have to use Thinkorswim, but we can't customize everything to everybody's platform. But we'll I'll deal with that after this discussion. Okay. The differences. Now, VXX options, they expire on Friday for weekly options, like normal options. Not on Wednesday that the futures expire. So VXX actually expires on the same dates that equity options trade on. So the Vxx Settlement is the closing value of the VXX on the Friday before the options expire, not the Wednesday, like we said. The actual last day for a VIX option, VIX, to trade is Tuesday on the close. The value of that VIX is going to be calculated on the print, quote unquote. It's called the print, on Wednesday morning. And you typically may not know that until sometimes, well over a half an hour before the open. Or after the open, excuse me. Of course, we're not really in the business of holding VIX options until expiration, so it's usually not a problem. But realize that that's how it's done. It's based on the opening value, the opening print on that Wednesday. The VXX, that settles on the value of the VXX, which is calculated on that Friday. Now, the VIX options, we talked about that is calculated from the futures price. The VXX, think about it as an ETF or a mutual fund that, depending on where you are in the cycle, and again, you can go out on the CBOE's website, and there is a mix of the first two for VXX, the first two expirations. Weekly options included in that now. Or is it? No, it's monthly. It's the regular monthly. They don't do the weekly. So there is a mix of the first monthly expiration and the second monthly expiration. So usually it is constantly buying that second expiration and selling the front expiration. The matter is, how much of each does it hold? As you get closer and closer to expiration of the front month, the holdings of VXX get shifted to the later month. And that's one of the reasons that I don't necessarily like to trade VXX, because then I have to start thinking about what is the mix of front month and back month or further out values of those futures. And usually that's not a big deal because usually they're pretty close to each other. But when you get big moves, that front month, just like everything else, because of the gamma associated with it, is going to move faster. And so depending on where you are in the cycle, that mix is going to be weighted to either the first expiration or the second expiration. Again, trying to make things less complicated, not more complicated. Let the computer programmers figure out what those should be. That's why I don't do VXX, because there is a natural, if everything is acting normal, there is a natural decay to VXX. Because you're buying more of, as time goes out, you're buying more of the back month and selling more of the front month. And the front month in normal conditions is worth less than the back month. I know it's complicated, and that's why I'm explaining it to you, but I'm telling you that I think that that's why I like playing the VIX, because it's just a cleaner play. And actually, the VXX options do have American style. I was wrong. Have American style because they expire the Friday before. And then the VIX options are European in style. Not that big of a deal because, usually you don't have to, we're not holding very, very short-term VIX options. But if you're going to become a VIX options expert, you're going to need to know that stuff. Okay, so that is the difference between them. There's not a whole lot to it when you talk in broad terms. To figure out exactly what the VXX should be in relation to the VIX can get messy. It's a combination of how much time to expiration and how crazy the market is at that point. Okay? So that's really all I have to say about VIX and VXX. We've gone at least, we've gone for 35 minutes or so. So any questions on this? If not, I'll stop the recorder. I know that there were some other questions. But let's take any of the VIX or VXX questions before I turn off the recorder. VIX options is extremely liquid. Extremely liquid. So is VXX. Thousands and thousands trade a day. Like I said, it's a big math problem for these, computer geeks. They love that stuff. Yeah, liquidity, certainly in the first couple months, liquidity is really high. I've never really gone out and traded even a 3-month VIX option. Because usually I'm doing it because I think something's going to happen or not happen relatively soon. You'd have to show me. You tried to buy a VIX option spread 2 weeks ago and saw the bid was 0. You'd have to show me I can't really comment on that without seeing it. So I don't know. Anna's question was, I tried to buy a VIX option spread 2 weeks ago and the bid was at 0. When would I trade VIX options? We talked about that earlier. I would trade the VIX options when I feel that the VIX futures are extended either to the downside or the upside, and or in conjunction with what my longer term swing holdings would be. So like I said, if I'm overly long in my portfolio, I might buy VIX spreads and VIX options, especially if the VIX is low. Just to have a hedge in there. Because I could win on both ends. Yeah, just take a picture, Anna, or like I said, I don't, without having the actual example, I really can't comment on it. And when you said that the bid is at 0, I think you mean that the offer is at 0, and I doubt it was offered at 0. Because then you could theoretically buy a number of them, and if that spread ever came into money, then you would make money, but... All right, I see a couple people typing here. And by the way, these afternoon sessions I'm going to start putting them on the blog, which is just, you can go to our website and then there's a tab for blog, or you can just go prospertrading.com/blog. That'll take you to the blog entries. Are EMAs better to use rather than SMA? It's different. It's not better or worse. All right, hang on. I'm gonna stop the recorder here, and then Java Man, I will